Hello, Oracles. Well, why is the Tesla bloodbath continuing? We're going to get into some of those reasons right now. Majority, not fundamental reasons, not reasons to panic. There's something that we need to pay attention to that, really wasn't spoken about over the last couple of years as to why the stock price was running as high as it was. Over the last couple of years, a lot of people FOMO'd into the stock, saw the stock going to the moon. I was one of them. I enjoyed that ride going on up. I bought in my first shares in December of 2020, right after the S&P inclusion. So I saw it dip down a little bit after that, and then we went skyward. Really enjoyed that run. What I did not realize along the way is there was a lot of people who were going into margin on that same time frame. What's happening right now is a lot of that margin is getting cleaned out. So this is why we're seeing such a massive pull down in the stock. It's this cascade effect. So as the stock price comes down as it is, with all of the other turmoil that's going on between what Elon is doing and people getting negative sentiment on that, bringing the stock price down further, it's triggering this cascade effect, then triggering margin calls, then triggering off other sell orders. That is just spiraling into even more. And so looking at the performance today, we were down almost 11.5%. So we had this massive drop in the stock price today. We have just seen this straight downward fall. I was anticipating a dead cat bounce by now. We have not gotten it. RSI is at 16.36. We had big volume today as well. Another 200 million shares trading hands. So looking at these numbers, looking at how oversold we are, we do have production and delivery numbers that are slated to come out next week. So where that's going to move us, I don't know. Obviously, that number is going to affect which way we go, one way or the other. Expectations right now are still around that 430,000 vehicle delivered mark. So we're just going to have to wait and see what comes out for numbers. And so again, going back to these margin calls, we've got Jason DeBolt coming out saying, closed out my margin, relinquished 13% of total shares, no margin calls. Hopefully I can buy some back, still own approximately 40,000 shares. While it sucks, it's only 20% of the 30,000 shares I lost in 2018. Getting better. Sold because of macro only, extremely bullish on Tesla stock and Q4. And he follows that up with, on the positive side, Tesla stock will be up massively from here longer term. Despite some of us losing shares, I'm confident we will exceed our previous all-time highs in a few years. Too many Tesla catalysts coming. Macro will improve too. Hang in there, everyone. And so if we are seeing investors like Jason that are coming down to getting margin called, or they're selling out so that they don't get margin called, this is why we see so much selling pressure going on. We had a lot of this margin that was built up into the stock over the last couple of years. It's not just FOMO buyers coming in. Some people are saying this stock is going to the moon. We're not just going to buy with our own money. We're going to buy with somebody else's money. It's a very risky play. Some people make very good money doing so. However, very risky, and you can lose even more than what you initially invested if you do something like this, especially in the market we are in right now. Elon has said many times recently, do not be in margin during times like this. This is why we saw him sell $3 billion worth of his shares most recently. He was getting himself out of possible margin debt as well. So Elon is clearing himself out. There's going to be a lot of other people that are doing the same thing. I don't know how many other people are out there, but seeing this cascade effect going on, we heard of last week that there was $5 billion worth of margin getting cleared out. We need to remember that market makers have this information to know what kind of margin is out there outstanding in different companies. Just looking around at all the different companies out there, I don't know which company has the most margin purchase to get into the stock itself. I would just venture to guess Tesla is probably one of the highest. So when you have that much margin in there and we see the market pulling down as it is and people are shorting, they're just trying to squeeze out as much of that juice as they possibly can. And when there's a lot of margin, that's a lot of juice. That's what we're squeezing out right now, is all of that. This is why we are so oversold and we don't have enough money coming back in to offset that, at least not yet. The reason we don't have that money coming back in is because, first off, a lot of the people who had that money were on margin and they're now selling their shares so they don't get margin called. The other reason is when it comes to institutional holdings are now higher on a percentage level than individual retail shareholders. This is probably due to the fact that retail has been selling out and not as much because institutions have been coming back in. What's going to end up happening is once we get that Moody's investment grade rating, more institutions will come in. However, the problem between now and then, chances are that's going to happen probably right after Q4 earnings. The problem we're seeing is there's a lot of unanswered questions that are out there. Right now is Tesla actually going to have the epic Q4 that Elon said we would have? Is Tesla actually going to see this reflection in their production and delivery numbers? Are they actually going to see this in their Q4 earnings? A lot of questions that are out there. We have a lot of people who have been tax loss harvesting lately. In doing so, they need to wait that 30 days before they buy back in so that they could recognize further losses if that ends up happening. So in process of this, timing-wise, looks like it's around the end of the month of January that we would see buying pressure coming back in. That's just based off of the timing with the tax loss harvesting and the answers that we want for all these questions coming at Q4 earnings. So the next month could be rough. We may not have a lot of buying coming back in. Gene Munster today said himself that he's anticipating a little run coming after Q4 earnings because we're going to be getting those answers from those questions. So my thought is, I don't know how much we're going to run. We are still going to be ruled by the macro in the near term. But if the stock price is going to go up, would you want to buy in now as we're going down or on the way back up? It actually might not be bad to do both. I'm not going to give any financial advice here. I'm buying on both ends of the spectrum here. Some people do wait. Some people wait to see, all right, we finally have that signal of going back up, and they're going to buy back in at that point. Not a bad strategy. A lot of people do this because you're now going up again. So you're not trying to time the bottom. You just got near the bottom, but you got it near the bottom on the way back up. You guys need to do what you need to do for your own portfolio and whatever is best for you and your investing strategy. So you guys choose what you want to do. And it's just, I think this is what's going to end up playing out over the next month is a lot of uncertainty. I'm sure production and delivery numbers next week are going to give us a lot of answers. And then we'll just kind of follow after that. We do have CPI data coming out in the middle of January. So when we get that information, that could give us an indication as to what the Fed might be doing for the FOMC meeting come February 1st. I'm anticipating a 25 basis point hike. However, the Fed may go with a 50 basis point hike. Market's really going to frown upon that, especially if we're starting to see even more deflationary pressures coming in. Lots of unanswered questions. Again, that doesn't bode well for the entire market. And definitely with Tesla, with so much margin and uncertainty out there, all this drama is definitely driving the price down. However, if you look at it long term, do you truly think that we are not going to ever recover from this? It's a question you have to answer yourself. I cannot answer it for you. Personally, I think we are going to get past this. We are going to recover. And these prices that we're buying in at now are going to be amazing. That is my answer. You guys can let me know in the comments below what your answer is. And when it comes to my investing strategy, there's different mentalities that I have as I go along. This is my first real recession bear market that I have been investing in, but I do remember the 2009 recession. I was working at Home Depot. We had a lot of layoffs, a lot of hiring freezes going on. It was a very painful time for many people. So when you're looking at your investment portfolio, you kind of need to change your mentality and your strategy. Is your strategy in this time going to be seeking maximum value in your portfolio for a dollar amount? Or are you seeking gains when it comes to the share count? For me right now, I am looking for share count. And the lower the stock price goes, the higher my share count can go with the less money I'm putting in. So I'm going to get more bang for my buck based upon the stock price coming down. This is one of the reasons why I can stay so positive when it comes to Tesla stock coming down as it is. I get that question a lot. How can you stay so positive when the stock is crashing? It is, but it's not going to crash forever. And as long as you believe that the company is going to turn around and actually do everything that they said they are going to do, then these prices should look amazing for you. And the lower it goes, the better it's going to be because you're going to get an even larger return on your investment. Think about it. If we all think the stock is going to go back up to $1,000 at some point, from here, that's almost a 10x. We could not have done that if the stock price was still around $300 to $400, at least not in that same short time frame. We might get that 10x sooner just because we have pulled down so far. Granted, the macro environment does need to have a lot happen for us to actually come out that strong, But as Elon said, he still believes that Tesla is going to be the most valuable company by market cap in the world in the next 5 years. That's going to take place, even though we don't know what the value of that is going to be. Don't you think you would want to buy in at times like this? Again, not financial advice, but this is what I am doing because I'm anticipating us definitely going back to all-time highs within the next 5 years. All-time highs is over $400, so that's basically a 4x from where we are right now to get back to all-time highs. So if we come lower, that's going to be a 5x or a 6x to get back to that point. So just trying to give you guys a little perspective as to why I can stay so positive, because I have the conviction that we are going to get back to those levels. It's just a matter of taking advantage of the prices now and just mentally preparing myself that these are the times that I want to accumulate shares and not be paying attention to the actual value of my portfolio. And two of the other reasons that we saw the price come down a little bit further today was we got in the insured vehicle numbers this morning for China. Those came in at 8,900. That was lower than expected, so giving more concerns about the demand issues over there. NIO also came in lowering expectations for Q4 deliveries, so giving more pause to the fact that they're having some demand issues over in China. And then we got some information about production and how Tesla is going to be slowing down production for the next few weeks. And now in this article from Tasmanian, we've got Tesla China clarifies Giga Shanghai work situation to stop speculation about production pause. Tesla China has clarified the situation with Giga Shanghai in order to curb further speculation suggesting a stop of production. Some parts of the factory are undergoing maintenance while others continue to operate normally. Recently, a number of U.S. media outlets reported that Giga Shanghai stopped production from December 25th until January 1st of 2023. Reports relied on Reuters information obtained from sources at the factory. Due to regular rumors, Tesla China had to once again clarify the situation to stop speculation. The company responded to local media outlet Global Times on December 25th, stating reports that Giga Shanghai is shutting down production in the last week of the year are not true. Tesla explained that the production line is indeed undergoing maintenance after it has been producing cars for a year. At the same time, auto parts workshops as well as factory for supercharger piles production will continue to operate as normal. The Shanghai factory still maintained efficient production and output in 2022. The vehicle production will carry out the annual production line maintenance work as planned next week, and the workers will have a rest during the production line maintenance period after 1 year of hard work. Workshops that produce charging piles and other auto parts have not stopped operation. It is not completely accurate to say the factory has been shut down. After the maintenance of the production lines is complete, Giga Shanghai will return to normal operation. Stopping production for 1 week will not have any significant impact on Tesla's supply, especially as Giga Berlin and Giga Texas continue to ramp up production. And now, as Troy Teslake says here, Tesla China has no orders waiting to be fulfilled. In other words, they have no backlog. However, they have a lot of cars in inventory, which is why production was paused for 8 days. So we've got Tesla China saying that they are just down for maintenance. We've got Troy Teslake doing numbers saying that they're pausing production because they need to clear out some of their inventory. Again, we won't know until we get these numbers that come in next week. So January 2nd, which is Monday, we will be getting these numbers released. If I'm available, I will be doing a live stream for that. If not, I will be doing a follow-up. So just some things to keep in mind when we're paying attention to what's going on as to why the stock price is trading the way it is. And I think right now, due to all of the speculation and drama that has been going on recently, we are now at a point where Tesla is going to be trading like a car company, where Tesla needs to prove themselves and now start to come out with everything that they said that they have promised. What's going to end up happening right now is we've got big institutions with all of this PE compression going on who are valuing Tesla like a car company because, to be honest, until Tesla can show with profits on their earnings to show that they are making money from other ventures that they're getting into that are actually making a major impact, they are going to be valued as a car company, especially in times like this with the economy. So for those of us who definitely believe that the company is going forward with FSD, software, AI, and energy, and all of that, these are great buying times. We see that. So when a company that right now is looking like a strong value play, when it's a high growth stock, that is a great buying opportunity. Now, of course, this is sort of right in Warren Buffett's wheelhouse. Whether he's actually going to buy into the stock or not, who knows? We shall see over the course of the year. However, looking at where we are and so disconnected from the true growth of the company in the future, if you truly believe that this company is going to grow as we have thought it would be growing over the last couple of years, then this right now is an amazing buying opportunity. I am taking it as that, and you guys can let me know in the comments below if you are taking it as that. And here we have Gary Black tweeting a quote from Dan Ives from Wedbush over on CNBC. The plane is crashing and Musk is focused on salted or unsalted pretzels. Dan has a buy rating on Tesla stock with a $175 price target. And now I ask the question, is the plane really crashing? Or are all the passengers just freaking out due to extreme turbulence? I remember a flight I was on into Palm Springs, and we were on this little puddle jumper, and the thing was all over the place. Going into that wind, it was gnarly. And I thought to myself, are we going to crash? And then I looked over at the steward, and he's just sitting there reading his book as if nothing was going on. And I realized that I was just freaking out and panicking unnecessarily. And it makes me wonder if this is exactly what is going on. Because if I showed panic and I was freaking out, people around me would start to freak out. And then other people around them would start to freak out. When in reality, there was no reason to freak out whatsoever. Think about how Tesla is operating right now. Elon said that there's nothing he could have done over the last 3 months himself that could have helped the team operate any better than they already are. The pilots are flying the plane just as they should be. The steward is operating just as he should be. There is no reason for us to be freaking out the way that we are. The plane is doing exactly what it is supposed to be doing. The team flying the plane is doing exactly what it's supposed to be doing. We are going to land this plane, and we are going to look back and realize that our freaking out for this turbulence was completely unnecessary. That is my take on this, and I'm going to hold strong to this because that is truly in my mind what is going on. We are freaking out in panic mode when we truly do not need to be. So hopefully this gave you guys some insight as to why we're seeing this massive pullback and bloodbath with the stock. Honestly, as Jason DeBolt had said himself, it really is more macro driven. He's not selling out any shares because of the company itself. He's selling out because the stock price is coming down and he's going to be getting margin called and doesn't want to. That's really it. He's still very bullish on the stock long term, but who knows how many other people out there are in the same situation as him, needing to sell significant amounts of shares so that they don't get margin called. That is the real reason that we are seeing this going on in the stock price. That's the real reason we just have all this extra juice that is getting squeezed out. Once we get that squeezed out, we will be able to come back up again. I don't think we're going to do a V-bounce and come back up strong like we did with COVID, but we will at least be able to hit the bottom and start to grow back up again. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a membership program and a Patreon. Those links are also in the description. Thank you so much. Have a great one.